Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Chainlink and its token Link. None of the content is financial advice. We'll be conducting machine learning based price forecast for Link, regression analysis, accumulation strategies, as well as estimated bull run target. So let's get started. Link over the last few days has been one of the most rallying cryptos. You can see over here under coin market cap as well. The price is at around $17, up by about 7.5%, or 7.25% over the last 24 hours, 9% over the last 7 days. Market cap at around higher than 10 billion by market cap is ranked number 12th. Again, could be a contender of top 10 cryptos by market cap. The volume is at around 1 billion, much higher than its neighbors. Again, you can see most of them are reeling at around 500 million or so. Link is almost 2x of that. So circulating supply at around 638 million out of the total supply of about 1 billion. So about 63% of the total supply is in circulation. So that is a good sign for tokenomics perspective, that any growth in market cap getting reflected back in price. So if we toggle between the market cap chart and the price chart, you are essentially seeing more or less the same chart. So for example, in August of 2024, the market cap was at around 5.7 billion. Now the market cap is slightly under 2x of that price. From if you look at August 5th, the price is almost from $9.5 now at around $17, slightly less than 2x. So going hand in hand. So if we check Link and its machine learning based price forecast, now that the price is at coming up at around $17 for this week, the bull case ceiling for weekly average price for Link is at around $18.5 per the machine learning based model. Again, the directionality is established by this pink line, which says that the likelihood of Link trending higher with time is higher. That means in this phase of the market cycle, the direction forecasted is up. The magnitude is established by this one standard deviation ceiling, that is without any euphoria in the market, the price of Link in the next 6 months could be between $18.5 and $32. The last time around, that is in December 15th of 2024, the price at a weekly average was as high as about $26. So if there is a euphoria case in the market for Link, that is if the market exhibits the 2 standard deviation moves to the upside, like it did in the below of top phase of 2021 rally, 4 years later, if there is this euphoria phase in the market, the Link's price in that environment in the next 6 months could be between $20 and about $48 per hour model. That means from the current price, it's around somewhere between 2x and 3x, somewhere closer to the 2.7x as a ceiling forecasted by the model. If on the other hand the price action suffers a downturn in the next 6 months, the support could be between almost $10 and $15. And again, if you are interested more into the tabular format of these forecasts, they are also available at the bottom. The base case is this pink line is the column in the middle. To its left are the 3 standard deviation bear scenarios, to its right are the 3 standard deviation bullish scenarios for any particular week in the next 6 months. You can check them out yourself under cryptoweeklies.com. All of the charts are available for free, not just for Link, for top 100 cryptos by market cap. In terms of the regression based analysis for Link, the fair value estimated by our polynomial regression model for Link is at around $48. That is closer to the 2 standard deviation ceiling established by our machine learning model. So kind of area of confluence that if the bullish upswing for Link continues for the next 6 months, the price could rally to its fair value per the model. Right now the price is undervalued. That means if we look at price from the from the 1 standard deviation and 2 standard deviation residual applied to the fair value to the downside, you would see that whenever the price is below this light green line, that represents a great time to buy Link again, or DCA Link historically speaking. Right now we are in that phase where the price action is lower than the 1 standard deviation residual to downside, which is at around $29. Furthermore, if you consider 2 standard deviation residuals, this is the dark green line, which has in the bear market has predicted the eventual bottom that link had on its USD pair at around somewhere at around weekly average of about $5. Now the 2 standard deviation bottom is coming in at around $18. That means price of link's price is currently below that 2 standard deviation residual applied to the fair value. So again, the key levels to watch for link is if it manages to go beyond $18, and then the secondary level is at around to consider is at around $29, and the fair value back to $48 for link per the regression model. If we look at the risk of accumulation of link, again this model helped identify the downturn. Again, the color codes based on the risk levels are identified with respect to the 20-week moving average, how the price is operating with respect to the 20-week. It predicts the local tops with this red color, and the purple is the bottoms, and light blue is the second lowest risk level over here. So right now per this model, again in December of 2024, the risk levels were as high as about 80%, and that kind of coincided with the topping phase for link. Now the risk levels are back at around 30%. If risk levels were to go back to that 80%, the price predicted by the model is at this point in time, if prices were to go to that 80% risk, the USD price would be somewhere between $38 and $40. Given when that occurs, the moderate end of the forecast begins with the 60% risk at around $34, roughly speaking. So between $34 and $38, that could be a shorter term peak for link if there is a rally in the market, and that rally does not get to that blow off top phase where the market cools off. If on the other hand, if the rally throws us a topping scenario at around close to at 100% risk, or between 90 to 100% risk, the price could be at of link could be at around $41 to $43. So this is a way to estimate the future price, as well as identify some of the best times to DCA in the market as well as out of the market. So for example, if we have this hypothesis that link is a token to accumulate only when the risk levels are less than 30%. So the shaded color coded regions are when the model says it's a good time to DCA, and the grayed out lines is where the model says it's a great time to either halt or DCA out of the market. Again, you can see that this model did identify most of the bottoms. Also the opposite end of this model, again you can go as low as about only 20%, less than 20% risk. That's when you will find these kind of deals. But again, personally speaking, 30% risk is what I use. On the other side of the things, it's whenever the risks are higher than 60% for an altcoin, that's when where DCing out of the market makes the most amount of sense. And this model does identify those local maximas where DCing out does make a relatively higher amount of predictions or accuracy for establishing some of the great times to DCA out of the market. So this is the SMA model for link available on Crypto Weeklies. Similarly, the DCA model is also price color coded with respect to risk level. This is a second model, helps better identify the bottoms based on this fair value regression based model, and how the price is doing with respect to that fair value. Risk levels are identified. Right now the risk levels are less than 10%. Again, prices only at 2%. Price is substantially below the fair value predicted by this model. Again, this model also serves dual purpose. First is to identify bottoms. Again, this model does a better job of identifying a range for accumulation wherever the price. So for example, you have this hypothesis only to DCA when the risk for link is less than 10%. This model did identify those times in the bear market of 2022 and early 2023, as well as middle of 2023 accumulation phases for Link. Right now it's saying that price of Link is in a similar environment like it was back in 2022 per the time adjusted and the market cycle adjusted risk levels. Now if we ask the models what could be the price if the risk levels were to go back to this 60%, higher than 60%, where the price is kind of close to a blow off top. Again, you can see over here 60%, 70% and 80% does get you somewhere to the eventual peak. So for this model at 60%, this is a slightly more bullish model. That's why we have a composite of all the three models at the end of the video. $84, between $84 and $107. That's what the model predicts Link could do in a Euphoria phase for Link in an upcoming bull run. So the way to another way to interpret that is if we apply this 2 standard deviation residual to the fair value for Link, and whenever this price is above the dotted red line, typically that's when one could say that the price is so overvalued that it makes the most amount of sense to DC out of the trade. Right now that price for Link is coming in at around $104. So these regression models are updated every day, every 24 hours to reflect what is the most accurate fair value for Link based on how it is trading for a prolonged period of time. So we do not retroactively fit any models, but it try to incorporate new data as and when it appears. So that's the second model for Link. The last one is for the bear market accumulation, the time weighted average price model. This model provides accumulation range especially in the bear market. You can see this model did a phenomenal job where since May 2022 till October 2023, this model identified this phase where the price was trading below the blue line, which is the time weighted average price for Link. For a high quality project such as Link, whenever it's trading below the time weighted average price, and if the hypothesis is if the project is high quality and has one more bull market in store in the depths of the bear market, accumulating below time weighted average price eventually does work out. Again, that is just a historical interpretation of these model. Again, you can see even in 2018 2019 did identify a great accumulation zone for Link. Similarly in 2022 2023, as well as closely in 2024, a couple of days where the price was below the time weighted average price. Right now the price is at around $17, average price is at around time weighted average price is at around $10. So the risk levels for this model for the time weighted average price is at around 46%. So as a composite of all the three models, what we have is an estimated bull run peak for Link that is available for most of the 100 cryptos by market cap. The weighted risk coming in at around 18 or 19% based on the three models. Regression risk, it's only 2% rounded off. Time weighted average price that we just discussed at around 43%, SMA risk at around 28%. As a risk reward based analysis based on the weighted risk and what could be a bull run peak at 100% risk, that's how this bull run peak is calculated at around $85. If you take an 80% of that, instead of a 5x from the current price, it would be somewhere at around 4x of 17 times 4 would be at around $68. So that's a more conservative estimate of the bull run peak with a reward of about 5x. At 100% risk, the price could be at around $85 for Link. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.